Well, it's because as these pension funds grow, we've seen this from the so-called super funds in Australia and elsewhere, Canada, the major investors in our public infrastructure here in the UK. We see that you can make long-term decisions. You can actually invest more capital at for a longer period at perhaps a slightly lower rate of return, and see the return of investment grow over time. So we have seen that used in quite a lot of our infrastructure in the UK successfully. And so there's no reason why that can't continue. I think with lots of smaller pension funds, that's just more difficult. It's harder to build scalable investments. But again, as well as these long-term infrastructure-based investments, which of course are important for SMEs and other businesses because they create supply chains, we'd also like to see more thought and action given to making additional funding available to our SMEs so that they can invest in themselves and grow at this time of increased costs of doing business.
Well, isn't that the point in many ways? You know, Rachel Reeves came in as Shadow Chancellor, spent a lot of time trying to reassure business that Labour was going to be very pro-business, and yet trying to run a business now is going to be more difficult with that increased tax burden. Do you still think that Rachel Reeves is a pro-business Chancellor?
I think we need the government to be pro-growth. We want the outcome. The words people use or the way we describe business is less important than the reality on the ground. And so we need to see actions taken to boost growth. We are pleased with reforms coming on planning. We're pleased that there'll be an infrastructure strategy, a trade strategy, an investment boost from the pension funds today, the industrial strategy, to name but two. So there's a lot of strategies. We want to see more action. And we really are hoping that this is just the beginning of some concrete announcements and steps to get investment flowing and to help business grow. Because yes, it has got more expensive, or it will be getting more expensive from the next financial year to run every business in the country, more or less.
And just very finally, Alex, you know, you obviously talk to businesses and deal with this quite a lot. It's probably not anger, but is there kind of frustration out there or uneasiness about the next year or so, given the increased tax burden and given concerns, you know, outside of the UK government's control about potentially a downturn in the global economy if Donald Trump's tariffs come into play? You know, that actually the next couple of years could be quite difficult for businesses.
Yeah, I just got back from a visit to our Cornwall chamber and met businesses of big and small across the county, and the NICs increase was the number one thing on their minds. It is important to voice that there is frustration. Although business expected NICs to rise, the thing that caught a lot of people out, including us, to be honest, was the reduction of the threshold, which brought a lot more people into the taxation band, as well as the higher percentage of employer NICs. And so that is frustrating. Businesses have had to replan from next financial year, and we are hearing that they are making tough decisions about recruitment and about increased wages and about investment in their business. So it's really important to express that. And that's why we need government to act now, to act for growth, unlock investment, and really get Britain growing again.
OK, Alex from the British Chambers of Commerce, thank you very much indeed for joining us. Let's go straight to George Parker, political editor at Financial Times. Very good afternoon to you, George. We're looking ahead to the Chancellor's keynote speech tonight. Just if we can start on pensions, if we may, what is the thought process in the Treasury about why this is the biggest shake-up, as they claim, to pensions in a generation?
Well, I think to take one step back, we just had the budget, which was all about tax and spend, and that really rattled some businesses, as you were just hearing there, people thinking that Rachel Reeves had lost touch of the whole growth agenda. And that's what she's trying to address tonight in this speech to city grandees, the idea of what the government's going to do to generate growth. And her plan, it's not an original plan because it was something that Jeremy Hunt, the previous Tory Chancellor, was talking about as well, was to mobilise those hundreds of billions of pounds of pension savings towards UK investments, whether that's in start-up companies or infrastructure projects. And so what we're going to hear her say tonight is this idea of merging this fragmented set of pension funds across the country, particularly local government pension funds, into massive mega funds, which we're better able to invest in slightly more risky investments, such as sort of start-up biotech companies, for example.
And George, let's be honest about this. This is Labour's hope, isn't it? That, frankly, with tens of billions of pounds worth of investment, they can get economic growth. And that means ultimately they don't have to tax people more and that they get re-elected. I mean, this is the parliamentary strategy.
Well, it's not an original strategy. It was, if you remember, Liz Truss's strategy, wasn't it? Growth was the underlying objective she was trying to achieve. This government's number one mission is growth. The truth is that so long as the British economy is growing at something like 1.5% of GDP a year, it frankly is not going to deliver the wealth we need to cater for an ageing population and all the demands on our public services. You need to have growth running at over 2% a year. And until they do that, there'll be all sorts of problems for the public finances and for tax levels in future.
George, I don't know if you heard I was asking Alex there about what the view of the Chancellor is within the business community. Labour spent a lot of time in opposition trying to claim they were more pro-business than the Conservative Party. And yet, they have taken a bit of a hammering. We've had a letter today from the British Retail Consortium really concerned about the tax burden. Is Rachel Reeves losing the room to a degree when it comes to business support, or is that maybe a bit too harsh?
No, I think that's fair. I think a lot of businesses feel let down. They ate copious amounts of smoked salmon and scrambled eggs before the election as part of this charm offensive by Labour. They thought Labour was all going to be about growth, being pro-business. And the first big economic decision they took was to impose a £25 billion tax rise on employers. So understandably, people are upset. If you chuck in the employment rights package, the quite large increase in the national minimum wage as well at the same time, it all conjured up this idea that the Labour Party maybe been pulling the wool over their eyes in the run up to the election. And then that's why, at this Mansion House speech tonight, it's so important for Rachel Reeves to say, look, we had to do all that stuff in the budget, but now we're going to focus on the things you really care about, which are removing obstacles to growth, mobilising capital behind investment, and doing something about financial services, which she calls the crown jewels in the British economy. So it's an important moment for Rachel Reeves tonight, for sure, to try and rebuild those bridges. And
just very briefly, George, as well, of course, chancellors can do enormous things. They've got enormous budgets, but they're also buffeted around by world events, and they will be concerned, won't they, inside the Treasury, about the potential impacts, particularly of tariffs from the United States, and the impact that could have on all that we're talking about, and that Rachel Reeves will be talking about tonight.
Very much so. And I think you'll hear not just from Rachel Reeves, but also the Bank of England Governor, Andrew Bailey, a very strong defence of open trade, free trade, open borders, very clear message to Donald Trump not to sort of throw a spanner into the works of a global recovery just as it's taking place. So I think the shadow of Donald Trump will be hanging over the very well-dressed people in the Mansion House tonight.
OK, George, really appreciate your time. Live in Westminster for us this evening. George Parker there, the political editor of the FT. Thank you, George. Let's bring you up to date with some of the rest of the news stories on this Thursday afternoon. And millions of Apple customers could be entitled to a payout if a consumer rights group wins its legal case against the tech giant, which claims that Apple has breached UK competition law over the way it deploys its iCloud storage. Apple has rejected the claims and says that customers are not required to use iCloud. Facebook's parent, Meta, has been fined some €800 million by the European Commission for what it called abusive practices involving its classified ads business. The Commission said the company had abused its dominant position and engaged in anti-competitive behaviour. Meta says it will appeal the decision. The parody website The Onion has bought Infowars, the conspiracy theorist Alex Jones' website, in a bankruptcy action. Alex Jones filed for bankruptcy protection in 2022 after he was ordered to pay $1.5 billion for defaming the victims of the Sandy Hook school shooting. Well, let's speak to Chris Johnson. He's the senior editor at Business Insider. Chris, very good afternoon to you. I think before we get into the details of this, just explain to us who these two companies are. Lots of people will be familiar with The Onion and Infowars. Many will not.
No, that's right. The Onion has been around for a good couple of decades now. It's a satirical website known for very silly takes on the news. I just had a quick look at some of the stories they've got up this afternoon about, suggesting that, dating sites might refer you to people you already know, but you thought you were too good for, stories like that, as well as somewhat more weighty topics as well. But Infowars, yes, Alex Jones was running this conspiracy platform for many years. He decided for some reason to declare that the Sandy Hook school shooting that happened back in 2012, I believe, was a hoax and involved actors, and was found guilty of defamation in an action brought by some of the relatives of the people, children and staff of that school who were killed in that horrible incident. And in September, a judge ruled that his assets could be sold off to help fund the $1.5 billion defamation payout that was ordered for Alex Jones to pay to the survivors.
Yeah, and it's fascinating this because it's had the support, this buyout, if you like, from the relatives of those Sandy Hook victims, that horrific school shooting. Is this kind of, put it crudely, kind of the liberal media in the United States effectively, you know, saying to Alex Jones and his organisation, well, you've got yourselves into trouble and we're going to kind of quite enjoy picking up the pieces?
Yeah, that's right. The chief executive of the company that owns The Onion has said that it wants to sort of, make fun of weird internet personalities and turn the site, into sort of a parody of itself. Infowars is not online still at the moment, but it's going to relaunch in January and, have the sort of content that, does sort of, try to take the wind out of the sails of folks like Alex Jones and the sort of, stuff that they like to put online.
Well,
it's a really interesting move, I think.
It is. But I suppose what I'm trying to get at here, obviously with online, people can pop up anywhere these days. This is much more about politics, really, than it is about business, isn't it?
It's a mix of both, I think. Yeah, I mean, the price that is being paid for these assets, which include things like an armored vehicle, a Winnebago, as well as the actual studio equipment and social media platforms or tags, I should say, has not been revealed. But yes, there's also an advertising deal with a gun control body that will involve that body advertising on the site. So it's definitely an attempt to bring the gun control message to a wider audience in the United States.
OK, really interesting stuff. Chris Johnson there from Business Insider. Thank you so much indeed for joining us. Thank you, Chris. Now, I know we're going to say it is, the 14th of November. It's, a long way, it seems, still to Christmas. But retailers are, unsurprisingly, getting ready for it because today we had the release of the highly anticipated John Lewis festive advert. Let's have a look.
Took you so long? We've seen a lot more interest in physical shopping since COVID, actually, and people seeing shopping as a bit of an event, an experience, a pastime. It's not too expensive to go shopping. We've seen our hospitality, so coming in for a cup of tea and a slice of cake, that's up by about 20% year on year. So people coming into physical retail is brilliant for the high street. As retailers, we've got to make it entertaining.
And if you haven't had enough Christmas yet, and you can never have enough Christmas, can you? Look out tomorrow for Business Live. You're going to see a lot more of this.
My job, I was previously an elf. I had to do what Nikki back there is doing now, which is entertain people for 2 hours when they went to see Santa.
I'll be explaining all, believe me, with those Father Christmases, those Santas, at 11:30 tomorrow morning. Please join me for that. You're watching Business Live. We're going to take a quick break. Coming up next, we're looking at the markets. The FTSE up a little today, just over 0.5%. We'll have all the details in just a couple of minutes.
There's always more to the news than a headline. we want to discover, to delve a little deeper, to find out what's really going on. Explanation, analysis, the people at the heart of every story. I'm Neil Patterson, and this is the Sky News Daily Podcast. So, by the end, we'll hopefully all understand what's going on in the world just that little better. Available wherever you get your podcasts.
I'm Martha Kellner and I'm Sky's US correspondent based here in Los Angeles. Sky News, the full story first.
I'm Martin Brunt and I'm Sky's crime correspondent.
I'm David Blevins and I'm Sky's senior Ireland correspondent. I've spent 30 years reporting the journey from conflict to peace.
Free wherever you get your news. I'm Neville Lazarus and I'm Sky's reporter based in Delhi.
Weeknights on Sky News.
This is your chance. Tell people. Welcome to the Politics Hub.
Our police force has apologised. If you want to find out about Grimsby, you come to the docks. I'm live in Jerusalem.
Are you not concerned that that could lead to all-out war?
Hello there, good evening. There are fears of an upsurge in violence. What's at stake here?
You are watching the press preview, a first look at the front pages as they arrive.
A show of military might and menace. Why should the West trust you?
Frankly, I don't care whether the West trusts us or not.
Sky News. Get the full story first.
Have a quick word for Sky News. Is the West right? Are you fueling Russia's war machine? American journalist Evan Gershkovich is on trial here, but was first on display.
I'm Ivor Bennett, Sky's Moscow correspondent.
Our app gives you the very best of Sky News wherever you are. Breaking news, videos and analysis.
Evidence of the crisis.
Podcasts, watching us live.
Live here from Washington.
Wherever you get your podcast.
All in one place. And all at just the touch of a screen. The Sky News app. Get the full story first.
Play Sky News.
From the Sky News Centre at 7.
Now that you're up to date, we can go into a bit more detail.
Things can change incredibly quickly.
Taken by surprise.
Have you ever known a moment like this in British politics before? Yes. Cheers.
We'll start with breaking news.
Let's get the latest on the ground.
So, by the end, we'll hopefully all understand what's going on in the world just that little better.
Day of this conflict.
They keep telling us that they want aid.
And this is what's left of it.
Tanks, heavy vehicle.
Why only in America? People want their country to work.
You want to jump in a normal life.
Why are these homes empty?
I want you to be honest with people.
That has happened within minutes.
Sky News, the full story first. Free wherever you get your news.
Let's take you through the markets on this Thursday afternoon. And US stocks are so far little change, down maybe just a fraction, as you can see, as investors try to recapture the post-election momentum that lifted the major averages to record highs in the last week or so. Disney shares were up 8% though today after the media giant reported better than expected fourth quarter results. Here in Europe, markets gained steam as traders digested a slew of earnings reports and assessed fresh inflation data for a signal of a possible interest rate cut. All the main indices there, as you can see, ended the day in positive territory. Here in London, the FTSE closed up just over 0.5% up before the break. Burberry being the big winner today, as shares in the UK fashion house were up nearly 19%. That's despite a fall in half-year revenues. Its new chief executive says that he's acting with urgency to stabilise the business. And if we look at currencies, the pound did manage just to end up the slightest fraction against the dollar today. It's been hit pretty hard in recent days, and the euro and sterling ended on even scores at the end of the day, €1.20. And let's look at the commodities market. European gas prices have risen after warnings of potential disruption to supply chains from Russia. They're up today, and oil prices have edged up just a fraction or two, but still overall on a pretty good figure at $72.49 for a barrel of Brent crude. Let's bring in Laura Cooper, Managing Director and Head of Macro Credit and Global Investment at Nuveen. Very good afternoon to you, Laura. Let's start with Europe if we can. We spent an awful lot of time talking about the United States. We've had GDP figures out for the Eurozone. We've had employment figures. Not looking terrible, but lots of uncertainty and lots of concern, particularly about potentially big tariffs on the way when Donald Trump gets back into the White House.
And that's the key phrase around uncertainty. This is a European economy that has really been struggling with getting that growth impulse going. And now we overlay that with the uncertainty around what potentially tariffs could look like when we do have that new US administration. It's one of the reasons why we're certainly seeing the euro come under pressure. And as well, it raises the key question, could we actually see, for example, Germany next year tip into a recession on the back of these tariffs? Not so much the tariffs themselves, but just the sentiment channel and how that could weigh on business and consumer confidence.
And you talk about Germany. We know there's going to be an election, isn't there? Now, it's unlikely the current government are going to remain in power, but there are wider problems beyond the political problems. This is an economy, Europe's largest economy, that has frankly not grown for a number of years.
Exactly. There's a series of of both structural and cyclical factors that are really weighing the German economy down. I mean, predominantly the manufacturing sector. When we think about the potential implications of tariffs, it's going to hit that auto sector even more. And I think markets at this stage are really looking for the potential new ruling coalition to come through with a greater degree of fiscal flexibility, perhaps to try to inject some stimulus to start to temper some of those growth challenges. And I think at this stage, that if that does come through, it's going to be many months away, probably not until the second half of next year. And even the degree of fiscal taps that they're going to turn up, I think is going to be very limited. So I think this is still quite a challenging time for Germany in particular.
And Laura, let's talk about the United States. We saw inflation tick up a bit yesterday, and there is concerns that inflation could get even higher, again, given some of the policies that Donald Trump has talked about.
And that's really the key risk. I think at this point, yesterday's data does suggest that the Fed is still poised to potentially cut rates by 25 basis points in December. But if we struggle to see those sticky gauges of inflation, predominantly shelter, start to if they don't actually ease, certainly by next year, then that could leave the Fed in a challenging position, perhaps having to pause the rate cutting cycle early next year, and then maybe keep rates in restrictive territory. And that matters from an equity market standpoint because markets are really pinning hopes that we either see aggressive stimulus come through in terms of Fed rate cuts, or we see tax cuts come through. And it's questionable at this stage how much more we can see equities continue to climb higher in the US on those two pillars. We could actually see, potentially a growth coming under pressure next year if we have a backdrop where rates have to stay higher for longer.
OK, Laura, really appreciate your time this afternoon with the market update there. That's Laura Cooper joining us down the line. Well, that is it from me for Business Live for this afternoon. Don't forget, we're back, of course, at 11:30 tomorrow morning. Do join us for that. Up next, it is the News Hour with Mark Austin. Stay tuned to Sky News. I'll see you tomorrow.
We arrive. A secret hospital hidden in the Myanmar jungle, treating the victims of this bloody war. This is Myanmar today. Its military rulers don't want the world to see, but we have.
I fight for my own future. I fight for my generation's future.
This is an actual crime.
They don't care for that.
Myanmar army is only a couple of kilometers away. So this is a major humanitarian disaster.
We've got your Sunday mornings covered. From the front page and the sounds of the streets to the voices of the people who make the major calls and big picture politics beyond Westminster. We'll put you at the heart of our story. A new start to Sunday.
I'm ready. Are you?
Join me, Trevor Phillips, Sunday mornings on Sky News.